The management at Saksoft, Mr. Aditya Krishna, founder and MD at Saksoft Limited, is now joining us on the phone line. Mr. Krishna, if you could just tell us about what Saksoft has done in the last one. Yes, there has been an acquisition. We briefly spoke about it earlier. Can you just tell us that what is the sort of strength that that acquisition would give to Saksoft?
Yes, the story behind the company, as well as and which is reflected in the stock price, is really something that we've been doing for the last couple of years in transforming the business operations of the company and making it a leader in the digital transformation space. So a few years ago, we acquired UK's largest analytics company called Aquistion. 2 years ago, we acquired a digital testing company called 360 Logica, and very recently now, in the middle of or the beginning of this month, we acquired a cloud mobility and IoT company called DreamOrbit. Now, the reason we have done this is because we believe that the IT market is changing rapidly, and deal sizes are getting smaller, customers are less risk averse, and in that, there is a lot of opportunity for specialized IT companies like Saksoft. And if we can strengthen our capabilities in the digital space, it bodes very well for our future business prospects, and that's what we are doing.
In terms of margins, if I just look at the annual margins of the company, they have been constantly declining but hovering between about 20 to 25. It's because of these acquisitions, and once you start to see the benefits of this acquisition, margins would go back to the earlier level of 30%? Whenever you transform a company, you've got to make some hard choices. And, transformation and strategy is all about making choices. Now, in that process, we've had to let go of some business, low margin business, and build capability as well as sales front end in our two major geographies of the UK and the US. So as we invest in the front end and as we buy companies or build in-house capability, margins have taken a hit because there's always a lag between the investment and the revenues coming in. But, it's temporary. You will see margins slowly coming up. And on the whole, last year, we had EBITDA margins of 15%, and our acquisitions are always in the range of 15% plus. For example, DreamOrbit was in the range of 20%. So overall, margins will see a gradual increase. The revenues have grown, but again, not broadly in line with the industries. But once again, these acquisitions starts to pay off. Revenue growth could also pick up meaningfully.
Yes. So, like I said, strategy is all about making choices, and we gave up some business deliberately. And because of that, revenue growth or top line growth was not as much as we would have liked. But that's now in the past. Organically, the company is beginning to grow. And with DreamOrbit's most recent acquisition, the company DreamOrbit is on a revenue run rate of 35 crores. So that automatically will get added on to the organic growth of Saksoft. So top line will also grow much faster in the coming months.
Can you just also tell us about your revenue mix? Majority of your revenues coming from UK and US, so that will be the focus area?
Yes, over 90% of our revenues come from the US and UK geographies. We will continue to focus on these markets, and the reason we do that is because these markets are developed, they're deep, there is a tremendous ability to derive good margins, with the resources that we have, and above all, very fair markets which are, willing to give companies like Saksoft an equal chance when we compete for large projects in these markets.
What are the sort of clients that you have? Which verticals within UK and US you cater to?
In the UK, we have a significant part of our business coming from the public sector. And this is a very, very good space because with Brexit, we see a lot of increased spending by public sector in the UK, and that's only going to increase. Now, when that public sector spending increases, it will mean more business for Saksoft. And it's a public sector which is well run. Decisions are quickly made. It's transparent, and they're spending a lot of money in the digital space. So public sector in the UK is a big part of our business. In the US, we do business in the financial services space, but again,
tier 2, tier 3 financial services, not the main money center banks. We do a lot of work in the retail space, and we do a lot of work in the manufacturing space.
In terms of dollar index and the strength that we are seeing over there, will that help margins or price competitiveness?
It definitely will help margins, and I think that bodes well for Indian IT, and I think it will continue to be one of the reasons why Indian IT will continue to succeed. Is if you've got wage inflation at 10% in India and 0% in the UK and the US, the only offset is a depreciating rupee, and that's definitely going to help margins.
So how much do you see margins growing in the next 4 quarters?
Like I said, EBITDA margins are 15% plus. I think if in the next 4 quarters we can take it to 17%, and in that in that range, we would have done a good job.
Right. Mr. Krishna, in terms of DreamOrbit buyout, when do you think the integration will happen? And I mean, the promoters of DreamOrbit, do they come on board? Will you have a strengthened research department as a result?
DreamOrbit, we have acquired 60%. The founders stay with the company. They're very strong technically. There are 250 very strong technical people, especially in the IoT space, which is the device-to-device connectivity, again, a very hot space. So the way we have structured the deal is the founders stay, the team stays, and there is an earn-out over the next 2 years. But we expect the business of DreamOrbit as well as the team of DreamOrbit to really add a lot of value to the overall Saksoft business.
Right, but is there scope for cross-selling? Are they clients that have converging businesses or interest in similar businesses?
Yes, there is no overlap of business, so there is always room for cross-selling. DreamOrbit focuses on the logistics space, so they do a lot of work for third-party logistics companies, and that, with the advent of e-commerce, that's growing quite rapidly, and there's a lot of scope to sell testing, to sell mobility, to sell analytics in that space. So, once we've got our arms around DreamOrbit, we will be able to, I'm pretty sure, put a cross-sell strategy in place.
Right. Would they also be developing new platforms for other verticals, some where you may be, giving some, services to clients, say, in the BFSI sector or others?
It's a bit premature to say that, but yes, we will look at options. We will explore options where we could use DreamOrbit skills, especially in the IoT space, to see if we can build a platform, solution for BFSI.
Mr. Krishna, can you tell us what are the average deal sizes when it comes to Internet of Things? This is the newer form of, technology, and it is IP-centric, but the deal sizes aren't really large. What is the average deal size?
So when we say Internet of Things, we mean device-to-device connectivity. So in that, what happens is, you take the case of trucking. When a truck is moving, it's got a GPS in the truck, but it's got sensors in the packages which are in the truck. Now, the sensors and the GPS is not what DreamOrbit does or what Saksoft does, but we write the code which makes sure that the truck is tracked, the packages are tracked, and they're constantly collected data on. And with that, we're able to make informed decisions. Now, that deal sizes are not small. You can see very possibly companies spending over $1 million a year in that space. So to make it more efficient, to make trucks more efficient, to make routes more efficient, to make delivery to make it faster, companies are willing to easily spend upwards of $1 million plus. So no way can you say deal sizes are small in that space.
But Mr. Krishna, the entire sector is now transforming to a new way of doing business, where analytics, business transformation, cloud, IoT, digital, the industry is moving to that. In such a scenario, how would you compete with larger names who have their set clients and they have relationships for a very long time? They are also investing in innovation and offering these services as well. Would you be able to stand out with your niche offering when competing with larger players like, say, Infosys or HCL Tech?
Yeah, great question. And, the answer is actually, if you look at it in a little bit of details, the answer sort of stares out at you. Now, if you look at the tier 1 IT companies, they have so much riding on revenues from run the business, what we call run the business, which is the traditional, infrastructure management, traditional testing, traditional application development. And you've seen they've all got significant headwinds because of the fact that customers are no longer willing to continue to spend at the same level as they did in the past in that space of run the business. So they want to spend more money in changing the business, and that's the spot in which Saksoft is. So now question is, can the tier 1 companies also, take that business and change the business? And the reason they don't have such a great chance in changing the business is because they have too much invested in run the business, and they've got too much resting on that investment to be able to really do give a fair running to the customer in change the business. So the customers are very open to look at companies like Saksoft, which specialize only in change the business, because they feel they'll get a much fairer perspective of how they should transform the business than they will get from an incumbent supplier who's got a lot of investment in run the business. So we are seeing a lot of deals where customers are willing to stay with the supplier for run the business, but willing to look at companies like Saksoft for change the business. Now, you said earlier about deal sizes getting smaller. Yes, in this context, deal sizes will be smaller, but deal sizes are smaller for a tier 1 player, not for a company like Saksoft. For us, deal sizes are pretty much okay because the size of our business, is not as large as the tier 1.
All right. Mr. Krishna, thank you so much for speaking with us at NDTV Profit and telling us more about what's happening in your business. So the move is towards change the business, and smaller companies like Saksoft will benefit and will be able to garner some good deals.